Yeah.
All right. Okay, thank you for having me. So I'm Amos, and I'm the founder of Seventise, a protocol trying to decentralize the bond market. So the problem we are facing is that fixed income solutions are actually inadequate for retail and DeFi investing community. So for the DeFi community, there are currently no existing protocols providing bond instruments for them. And this makes hedging against volatility in Bitcoin very difficult. So when Bitcoin prices plunges, it erodes returns on DeFi investments because the returns are based on is denominated in their currencies. So when Bitcoin plunges, it's heavily correlated to them. And then for retail investors, the transactional cost actually erodes their returns because we are in a very low yielding environment. So interest rate around the world is very low. So we can see that fixed income solutions are inadequate for both of the community. So our solution is to build a marketplace application where retail and DeFi community can invest in bond instruments at a low cost. So we have two product offering, one being the synthetic bonds, whereby we bid in the primary market and mirror this asset on Seventise so that DeFi investors can actually invest in the bonds to build safe and consistent returns. The second one will be entity bonds, where capital seekers such as small and medium enterprise or early stage startup issue retail bonds to Seventise community so that they can raise capital at a low cost. So this function is basically a bidding in the primary market, as we'll see in the demo later. So our value proposition is a seamless new way to invest in bonds. So we aim to be a one-stop shop for fixed income products at a low transactional cost. We'll also be the first platform to provide sovereign bonds for DeFi investors to build safe and diversified portfolio. We'll also be the first to support primary market functionality for entities issuing bonds to the community. So we'll have the demo. So in this demo, we'll see the perspective of two users, one being the capital seeker, the bond issuer, and then the next one will be the bond holders. So for the capital seeker, they will first register the bond on the platform itself. Once they register the bond and confirm the transaction, the bonds will appear on the platform itself, on the marketplace, so that it will be visible to the investors. So investors who are interested can do the due diligence, and then before starting the auction, the bond issuer can actually market the products on various social media, so to enable a successful auction. And once adequate marketing is done, the bond issuer can actually start the auction. And when the auction is open, investors can actually bid for the bond by submitting their orders, placing the orders by placing the number of bonds they want and the rate of returns, which is the coupon rate. So when the auction is successful, then the capital, 70% of the capital will be transferred to the bond issuer, and 30% will be locked in the smart contract as collateral. Because we know that bond issuer will default, so we want recovery rate to be 30%. So in order to unlock the collateral, the bond issuer will have to pay a minimum number of coupon payments to unlock the collateral. So let's see the demo video. Is it playing on your side?
It's playing. There's no sound, right?
Yeah, there's no sound. So this is where you register the bond, and then once you register the bond, you'll appear on the marketplace. So this is how the bond issuer will issue the bond, and then when you've done enough marketing, then you start the auction. Then once the transaction is confirmed, the investors will actually see the bond auction as open. And then when they see it's open, they can actually bid for the bond. So you just submit like how many you want and the rate of returns. And then the winning condition is based on the rate of returns, and the algorithm is through a uniform pricing auction. So all the winning bids will have the same rate of returns. And then once you end the auction, the losing bid will be refunded and no more bids will be accepted. Then after that, you will have an accept button where you can actually get the capital. So when you press accept insurance, two things happen. You get the capital, and then the winning bids get the token for the bonds. Yeah. So this is a little bit of the demo and the user experience of Seventise. Yeah. And for our market opportunities, just last year, there were 1.2 trillion sovereign bonds being issued and 850 billion corporate bonds being issued. So we want to be a platform that bridge bond issuance to the retail and DeFi community. And I believe this is a huge opportunity because based on this year's market activity of retail investors, we can see that retail investors are more and more comfortable in building and managing their own money. So they want to build diversified portfolio. And thereby, the demand for retail bonds will be increasing. So we want to be in a position where we can bridge the global issuance such that more of the global issuance will actually start to target the retail market and to make this higher demand. And as for our revenue model, 0.25% trading fees will be charged for all investments. So I projected 500K revenue. So this is the goal by 2025. And to reach this goal, we have to have 100 million of annual mirror sovereign bonds, as well as 100 million of annual issuance by capital seeker. So 0.25% trading fees is because institutional investors, they face 0.17% trading fees when they bid in the primary market. Whereas for retail investors, when you bid for retail bonds, they face 0.72% trading fees. So we want to be a platform that is very attractive to them, such that when they want to invest in bonds, we are the default option. So let's see how we can get this size by 2025. So our go-to-market strategy to acquire users onto Seventise is to launch a mainnet. The mainnet that we have chosen is to build on Terra, because Terra provides an option to use stablecoin to pay gas fees. And also it's a blockchain that is low on gas fees. So it helps the user experience because they do not need to trade stablecoins from Ether and then pay the gas fee in Ether. So it makes sense for users to calculate their transaction fees and in the end, the rate of returns of their investments. So once we launch a mainnet, we'll issue our first bond to the community on Seventise. So it will be a fixed coupon bond, and the size of the bond depends on the progress that we have made and the speed that we will be progressing. Then once we raise capital, we will start mirroring asset for DeFi investors to invest in. So this will be sovereign bonds, and it will be our key strategy to acquire users onto the platform. And as we are mirroring asset, we will engage with the community through social media and partnership with early stage startups. We also explore whether new and upcoming protocols who want to raise funds using our platform as an alternative instead of just listing their tokens. So this will preserve the token value down the road. So in terms of competitive, we are positioned ourselves to be a safe investments with low to moderate investment. So ultimately, I see Seventise as a complementary goods to all the DeFi protocols in the landscape. So investors in DeFi ultimately wants to optimize their risk-adjusted return. So with our presence, they can actually build a diversified portfolio easier to optimize this risk-adjusted return. So it's a good position for Seventise to be in. And lastly, the roadmap for the next 12 months. So firstly, I will start building a founding team. So as I build the founding team, we will start to test and develop on Terra. And by Q1, we will aim to launch on the mainnet. So on top of that, we'll also be building a mobile application where it's a simple wallet functionality that allows users to see how much bond they owe, what is the upcoming bonds, and whether or not coupon payments have been paid. So more important thing is to serve as a marketing community so that people can actually see what is the up and coming bonds. And then it will also be another stream of revenue for when entities issue their bonds. So they will want to market to the community. So they will through the market mobile app. And then by Q2, we will issue the first bond on Seventise. And part of this capital that we raise, we will be exploring staking functionality on Terra. So earlier I mentioned that we'll park collateral in a smart contract, and we don't want the collateral to be idle. So we want to delegate the collateral to a staking vault to earn returns. So this will incentivize bond issuer to actually pay timely coupons and unlock the collateral. And then by Q3, we will start aggressively mirroring bonds on the platform to attract investors and DeFi investors to our platform to invest in the synthetic bonds. And by Q4, we will start exploring automated underwriting. So this automated underwriting is similar to automated liquidity provider, whereby investors will put money into a pool to provide underwriting service. So this will increase the success rate of auction being successful, and in the process, investors or the providers can earn underwriting fees. Yeah. So this will be the end of my presentation, and I hope this is the start of new bond. And I open the floor to questions and answers, Q&A.
Did you say you'll mirror real world bonds as well?
Yes.
So like take them into custody in an entity and then sort of issue a token against that.
Yes, correct. That will be the synthetic bonds, which is the safe.
Yeah, exactly.
Yeah. So this will be how DeFi users can build a diversified portfolio. Because a lot of times when I try to invest in DeFi, when Bitcoin prices plunge, then the returns are just eroded because it's correlated with the Bitcoin. So with fixed income, it's easier to hedge against that.
Yeah, but end of the day, it's a facilitation to buy real world bonds in crypto.
Yes.
And isn't that, I mean, the exchanges have already jumped into the business of tokenizing shares, like the pre-listed.
Yes, correct. But the thing is, shares are easier to mirror. So right now, I want to put this into custodies, and it will be very safe for the DeFi investors. I don't think there is a protocol that is doing that right now. So it will be a new thing, and it will be complementary to the mirror protocol. I think that's the only thing that is doing the synthetic shares. So it's sort of a complementary.
You've touched upon marketing. I've seen that. Do you think that's enough? Because there are a lot of synthetic products, products that are promoting synthetics. So, yes. and a lot of them have actually failed as well. If you've been with the markets, don't you think it's a tough space to conquer?
So, a lot of synthetics are quite hard to understand because I think DeFi investors, they want to understand what they're investing in. And bonds usually is quite simple to understand. And I think most of them fail because they try to do overcomplicated stuff. And that is why many people do not want to invest in that. So I think bonds is relatively easy to understand. And when they understand how the synthetic bond is made, I think they'll feel rather at ease in investing in it. Because at the end of the day, we are just earning the facilitation fees, and whatever that the sovereign bonds give us, they are receiving it. So it's quite safe. So this is where we try to take the users onto our platform and then connect this to the entity bonds. So that's how I try to use solve the chicken egg problem.
That's a very optimistic conclusion, I must say. Though the real world implications are far more deeper than just simple ideas about creation of products. Because I think it's pretty tough to educate the audience about. I mean, crypto audience right now is discrete. It's crypto audience, right? It's not traditional investors. It's not traditional traders. These are crypto audience. I mean, it's a crypto audience, right? And they just don't. Most of them, let's put it that way, a vast majority of them don't even understand finance as an industry, let alone more sophisticated instruments like the one you were talking about. And hence it has been a challenge to sell those products.
I would agree.
If you agree, why didn't you mention that?
Yeah, so for a lot of synthetic products, even I as a finance major wouldn't really it's very hard to put my head around. But I think in terms of fixed income, it's quite clear how the product works. So it's like lending money to the protocol, and then it will return you after a while. So I think it's easier to educate based on bonds. But your point is, it's also, yeah, a lot of crypto people are not major in finance, so they wouldn't really have the knowledge. Yeah. So that is
So
one thing.
why don't you take this to the traditional crowd? Why don't you think of marketing plans inviting fresh crowd, financial crowd, the real bond trading crowd to crypto?
So you mean to provide a platform for them to issue bonds to retail investors?
Not to issue, and obviously, I mean, that can be one of the things, but I think it's a harder nut to crack. I was talking about a rather simpler idea, which is to bring last mile user, the retail audience, the bond buyer to your platform. Because I totally understand it's not a very tough game to synthesize products, financial products on tokens. That's been done, and that can easily be done, right? It's a solved problem. The bigger challenge is who would buy that.
Yeah, so the audience was retail market also. So it's both DeFi community and retail investors.
Mm-hmm.
Yeah.
So how do you wish to talk to them in crypto? Why would they come to a new platform that's talking a whole new language? Has this alien technology called blockchain, and on the top of that has something called crypto, which is already being speculated by regulators around the world, and has media coverings that are mostly not in the favor, at least in the sweet minds of a retail audience. Why would they want to buy it through your platform and not the one that is already working in their favor?
So for me, when I try to buy retail bonds, it's rather difficult. It's a lot of steps. So what I have to do is to open an account with a local bank, then submit my bid for the local bank in terms of primary market. But if it's for secondary market, then retail investors can buy from a brokerage. So for me to sell to the retail investors, I think mostly I will abstract away the blockchain part and then provide ease of use. So this is how I will try to sell to them. And firstly, we want to sell sovereign bonds to them. So I'm based in Singapore. A lot of my friends and peers do not own any sovereign bonds elsewhere. They only own Singapore bonds. So we can have a platform that actually help them expose to different areas of bonds. So the blockchain part and crypto part can be abstracted. So the only difficult thing is to use stable coins to buy the bonds. And if there is ease of use for that, I think they will be quite welcome to do that. Yeah.
Cool. So it's a long journey for sure.
For selling synthetic bonds to DeFi investors, you think it's a very difficult thing?
Selling any instrument that's not really crypto, blockchain representation, crypto token, let's call it a utility token in real terms, has always been tough up until we've got this new wave of NFTs, which is easier and an art form, not a sophisticated financial instrument. So we've already seen the decline of security tokens. We tried hard. We have seen a lot of hype being built around it. And actually, regulators were in support of security tokens. And even then, we don't see them now. Actually, not a lot of them. Let's put it that way. So we have to learn sooner than later that crypto is a different audience. It's not a traditional financial audience, right? They love utility tokens. They have their own ways of looking at projects. So that's why I'm saying it's a long way. It's not impossible. It has to happen. End of the day, these roads have to converge. It totally depends on how committed you are to your startup, how committed you are to marketing, what's your level of dedication. Altogether, you're not looking at something else, and fully focused on promoting this cross channels. Try and find and reinventing ways of marketing, taking the word out, explaining people, stuff like that.
Okay, thank you.
Right.
Yeah.
Cool. So we'll get back to you with our conclusions. If nothing, then we'll at least